So let's start with the facts on the UWM Two Harbors deal. In December of 2025, UWM announced an agreement to acquire Two Harbors in an all-stock transition. That was valued at about $1.3 billion. Two Harbor wasn't just another mortgage company. It bought a huge mortgage servicing portfolio and Round Point, its servicing operation. Now, at the time the transaction was announced, UWM said combining the two companies would take its mortgage servicing rights portfolio to approximately $400 billion. So UWM also projected approximately $150 million in potential cost revenue synergies. And something else was explicitly part of that rationale. Two Harbors and had a lot of capital markets expertise that UWM believed could create efficiencies in financing and hedging in secondary markets. It could add to their current company. So now let's forget everything we know today for a minute. We're going to go back to December of 2025. We're going to imagine we're sitting in his chair of the person who has to make this decision. You're running the biggest mortgage lender in the country, and you spent years talking about growing independent mortgage broker channel. You're bringing servicing in-house. Servicing gives you another way to interact with customers after the mortgage closes, so you can help mortgage brokers retain their clients, which is one of their biggest weaknesses in the mortgage world. It gives brokers additional refinance and repeat business opportunities. You can see all these brokers that you helped you continue to grow and create recurring servicing revenue to help their families and their communities. And here comes an opportunity to dramatically increase that servicing platform essentially overnight. There's an upside. Now, there's also risk, as with all business decisions, because mortgage servicing rights move in value when the interest rates move. And when the rates fall, people tend to refinance faster. Now, if people refinance faster, you're not servicing those mortgages as long, so the economic value of the servicing rights can decline. Now, if you're about to dramatically increase the size of your servicing portfolio, and you have already dramatically increased your exposure risk, so you put UWM on a larger hedge around the anticipated transaction. And we fast forward a couple months and the acquisition doesn't happen. Cross Country, which is a retail lender, mid-size, comes in with another offer. Now, Two Harbors ultimately terminates the UWM transaction and proceeds with Cross Country after a few-month battle that most you can read about in papers, but that wasn't the future UWM was planning for when the original transaction and related risk decisions were being made. And then the market moves against UWM's hedges. So UWM reported a $603.2 million loss in interest rate derivatives in the second quarter of 2026. Now, the company reports a $451.9 million quarterly net loss. So the equity falls to roughly around $1 billion.